Hello everyone, I'm Yazan Ibrahim, or as some of you might know me, Yazan Abu Ghosh. Today we're going to dive into a fascinating and essential topic, Fraud Examiners, Section 3 Investigation 3.9, Tracing Illicit Transactions. Today's deep dive into the world of fraud investigation, whether you're an aspiring fraud investigator, a business owner, or simply curious about how organizations manage their finances, or if you are auditor, this journey will shed light on the often complex systems that drive decision making. Welcome to a deep dive into the fascinating field of tracing illicit transactions, a cornerstone of combating financial crimes and fraud investigations. In this educational presentation, we'll embark on a journey to unravel the complexities of tracing, how investigators follow the flow of illicit funds, uncover hidden assets, and pave the way for recovery and accountability. Get ready to explore the systematic processes, practical methods, and intriguing tools that fraud professionals use in their quest for justice. Let's begin by understanding what tracing entails. At its heart, tracing is the process of investigating the movement of property and financial transactions to determine their origin, flow, and current ownership. Think of it as following a digital breadcrumb trail left by perpetrators, where every step reveals a piece of the puzzle. But why is tracing important? Imagine a scenario where stolen funds are cleverly hidden across international borders, circling through shell companies and obscure accounts. Without tracing, recovering these funds would be like trying to track a drop of water in the ocean. Tracing allows investigators to pinpoint where the money has been, who handled it, and where it might be now, enabling recovery and holding wrongdoers accountable. The role of fraud examiners in tracing work. Fraud examiners are akin to detectives in the world of finance. Their job is to meticulously analyze data, identify fraudulent transactions, and pursue lost or hidden assets. Whether it's helping a fraud victim recover criminal proceeds, assessing whether a defendant can pay a court-ordered judgment, or tracking the assets of a judgment debtor, their work is fundamental in achieving justice. Fraud examiners rely on well-honed techniques involving both direct and indirect methods of tracing, which we'll explore shortly. Steps in the tracing process, from discovery to recovery. The journey of tracing illicit transactions begins with a systematic and structured approach. First, investigators collect all available information about the subject or persons involved. This process is ongoing and encompasses everything from public records to non-public data accessed through legal means. For example, public records might include government databases, while non-public records could require subpoenas or court orders to access. Interviews are another critical source of insight. Investigators question subjects and those close to them, asking about income, expenses, assets, and associations to piece together a comprehensive profile. Let's take a moment to delve into the kinds of information investigators seek. Details about the subject's financial and behavioral profile are essential. What is their net income? Do they have any unexplained wealth? What assets do they own? Houses, cars, or even high-value collectibles like boats or luxury watches. On the behavioral side, investigators look for lifestyle indicators, such as changes in spending habits or associations with suspicious entities. Each of these factors offers valuable clues to tracing the financial trail. Methods of tracing: direct and indirect approaches. The methods of tracing fall into two broad categories: direct and indirect approaches. The direct method relies on concrete evidence, such as bank statements, transaction receipts, and tax records. These documents reveal clear, visible trails of where the money has gone and how it has been used. Imagine a banker's ledger as a goldmine of information, showing deposits, withdrawals, and transfers that can connect perpetrators to their actions. In contrast, the indirect method requires investigators to infer information where direct evidence is lacking. This might involve analyzing unexplained wealth, unexpected lifestyle changes, or discrepancies between reported income and expenditures. For instance, if someone officially earns $50,000 a year but drives a top-of-the-line luxury car and owns several vacation properties, the indirect method would scrutinize these discrepancies to build a case. By piecing together circumstantial evidence, this approach complements the direct method by filling in gaps in the financial picture. Tools and techniques in financial investigations. Tracing relies heavily on data analysis and investigative tools. Financial databases are built to organize and analyze transaction data, with investigators meticulously combing through details like bank account numbers, deposit tickets, and wire transfers. Bank codes, such as ABA transit numbers in the US or SWIFT codes for international transfers, help identify the origins of transactions. These codes are like fingerprints, each one revealing a unique story about the flow of money. Electronic payments, including mobile transactions and cryptocurrencies, also come under scrutiny. Investigators examine patterns in payment activity to uncover hidden income sources or unreported cash flows. For example, unusually large deposits into an account or missing recurring payments raise red flags that can point to illicit financial behavior. Even something as straightforward as a deposit ticket can provide clues, like the source of the funds and the institution involved, helping to build a case against the individual being investigated. Fraud examiners also tackle the challenge of correspondent banking, where one bank provides services to another, often for international transactions. While legitimate, this system can be exploited to obscure the origins of illicit funds, especially in jurisdictions with lax anti-money laundering (AML) regulations. This is yet another frontier in the battle against financial crime. The end game: asset recovery and legal accountability. Tracing doesn't end with finding the money. It's about recovering it and holding perpetrators accountable. This step requires close collaboration with legal professionals, forensic accountants, and law enforcement agencies. Investigators must identify the perpetrators, establish the flow of fraud proceeds, and use legal mechanisms to freeze or recover assets. This could involve obtaining court orders to seize properties, freezing bank accounts, or initiating lawsuits. Their efforts ensure that victims can regain what was stolen and that justice is served. Why tracing matters. Key takeaways. By now, you've seen how tracing provides a powerful framework for investigating financial crimes. Whether through direct or indirect methods, fraud examiners play a pivotal role in shining a light on illicit activities, recovering hidden assets, and ensuring accountability. Their work bridges the gap between complex financial data and actionable legal outcomes, making them invaluable in the fight against fraud. This concludes our exploration of tracing illicit transactions, but it's only the tip of the iceberg. The layers of financial crime are vast, intricate, and always evolving, requiring a constant effort to stay a step ahead. By empowering ourselves with knowledge, we not only understand the mechanics of tracing, but also contribute to a world where accountability prevails. Stay curious, stay vigilant, and keep learning. Thank you for joining me on this exciting journey. Now let's move to financial intelligence units, FIUs, the unsung heroes of financial crime prevention worldwide. Think of them as the detectives of the financial world, sifting through colossal amounts of data to uncover suspicious financial activities. For instance, the FIU in the United States, FinCEN, operates under the Bank Secrecy Act, BSA. This law mandates that financial institutions submit key reports like currency transaction reports, CTRs, and suspicious activity reports, SRs. Picture this: you're a bank teller and you notice a client regularly depositing just under $10,000, a classic move to avoid reporting thresholds. Thanks to CTRs and SRs, such activities don't go unnoticed. The reports help FinCEN track potential money laundering, terrorism funding, or other illicit behaviors. Similarly, other countries have their own FIUs to enforce anti-money laundering and counter-terrorist financing laws. Austrac in Australia, for example, ensures compliance with the AML-CTF Act, and the UK's National Crime Agency, NCA, keeps tabs on suspicious transactions tied to money laundering or terrorism financing. These agencies are like an intricate web, connecting countries and tackling financial crimes globally. Now let's zoom in on stock brokerage records, your treasure map when tracking securities transactions tied to illicit activities. These records meticulously document all details tied to securities purchases and sales. They include client account applications, loaded with personal and financial details, computerized records of transactions, securities or cash receipts, and confirmation slips for stock purchases. Imagine flipping through a brokerage statement, like a detective flipping through an old notebook, tracing the financial breadcrumbs back to unreported wealth or criminal enterprises. And here's a quirky twist. Sometimes securities aren't even in the client's name, but in the broker's name, a method referred to as street name holding. This practice can make tracking money all the more thrilling. Tax-related documents, they're not just for accountants. To fraud examiners, they are like light shining into the darkest crevices of a suspect's financial life. People may hide illicit funds, but their tax records often reveal hidden income, concealed assets, or clues about undeclared businesses. For instance, imagine someone claims to be an average middle-class employee, yet their tax records show significant dividends from overseas investments. The discrepancy could be the thread that unravels a much larger scheme. The importance of accounting records cannot be overstated in financial investigations. Think of cash journals, petty cash accounts, and expense reports as if they were gold mines. Through these, investigators can pinpoint discrepancies, uncover misappropriations, and get closer to revealing fraudulent activities. Asset purchase and sale records are another window into the world of hidden wealth. They not only reveal who bought or sold an item, but also provide insight into payment methods. Did someone pay for a multi-million-dollar yacht in cash? That's a red flag worth exploring. These tools bring us to the concept of indirect methods of tracing financial transactions, the Sherlock Holmes of financial investigations. Instead of relying on explicit documentation, these methods use circumstantial evidence to draw conclusions. For example, the asset method, also known as the net worth approach, delves into sudden changes in a person's net worth and matches them against their known sources of income. Did someone miraculously gain wealth overnight? Follow the assets. They might tell a different story. Another detective-worthy method is the expenditure method. By comparing someone's spending habits to their reported income, investigators can uncover funds from dubious sources. Imagine someone with a modest reported income of $30,000 a year, but a luxurious lifestyle that screams Beverly Hills. Digging into expenditures often helps expose a hidden and often illicit income stream. And for the methodical investigator, there's the bank deposit analysis method. This approach meticulously examines deposit patterns, deducting transfers and redeposits while zeroing in on unexplained cash. It's like piecing together a jigsaw puzzle where each unexplained deposit could be a missing piece of the criminal story. Building a subject profile is a cornerstone of fraud detection, and it starts with two elements: a financial profile and a behavioral profile. The financial profile is the cold, objective part that details a person's assets, income, liabilities, and expenses. It points out where things don't align, like expenses exceeding income or unexplainable sources of wealth. On the other hand, the behavioral profile adds a touch of human psychology to the mix. Sudden behavioral changes, like someone living a more extravagant lifestyle or incurring massive debts, signal hidden motives or perhaps attempts to cover up fraud. Speaking of behavior and lifestyle, imagine trying to hide assets. Perhaps someone moves their wealth into collectibles like rare art or jewelry. Maybe they use prepaid cards, known for their anonymity, or invest in cryptocurrency. Cryptocurrency, by the way, is one of the new age ways fraudsters hide their money. While blockchain technology keeps transactions public, fraud examiners have the tools to trace these transactions, pulling back the curtain on perceived anonymity. Now onto uncovering hidden assets, a topic rich with mystery. People hide assets for many reasons: to evade taxes, shed liability during divorce proceedings, or avoid creditors. Common tactics include using fake transfers, hoarding physical cash, or depositing funds under someone else's name. Think offshore tax havens like the Cayman Islands or Switzerland. These jurisdictions provide secrecy shields, but with modern tools like subpoenas and mutual legal assistance agreements, fraud examiners are making waves internationally. To wrap things up, understanding financial records and fraud detection is like standing at the edge of an iceberg. The visible part is just a small fraction of what lies beneath. Whether it's following suspicious flows through FIUs, analyzing tax records, or piercing through convoluted attempts to hide wealth, this field demands a blend of curiosity, sharp thinking, and relentless determination. Stay tuned for more as we continue diving into the fascinating world of forensic investigations, tracing hidden assets step by step, and unraveling mysteries that make fiction pale in comparison. Thank you for watching, and as always, continue learning. Stay curious, and we'll see you next video.